I want to learn how to trade. I want to make money trading. How do I long? How do I short? How much leverage is safe? What are some simple trading strategies that I could use to make money? Today, I sit down with trading expert Evan Aldo.
This is probably some of the most basic things that I think the average person can use to potentially be a profitable trader.
To start my education on how to safely use leverage to trade crypto and how to win. Just to be very clear, most people will lose money trading, correct? This is dangerous. We discuss how to make money consistently and safely.
I started with a 10K account back in November. It's now about a 70K account, and that's hundreds, if not probably 1,000 trades over that time.
And this is a beginner's guide tutorial walkthrough. So I literally ask Evan to show me. If I wanted to set that up on an exchange like Bybit or whatever, how would I do that?
Let's do that. I'll enter it right now. It's a great question.
Join me on Bybit now with referral code Altcoin Daily and grab a $20 sign-up bonus immediately and earn up to $30,000 in deposit bonuses. Link down below. Sign up, follow along.
Very important now. We're gonna set our stop loss.
And watch today's whole conversation, because this may seem confusing at first, but I'm so glad I listened to the whole conversation. You wanna hear something crazy?
Yeah.
When we started this, it looked really confusing, but I'm getting it. Click the like button to support me. Any website or tool referenced in today's video is linked down below. And let's start. You're an expert. I think you're the man to talk to.
So there are a lot of different ways to do it. Obviously, that's a great question. Really honored to be on the channel. Really, thanks for having me on. There's a lot of different ways to do it. The simplest ways I have found are kind of more low leverage, kind of swing trading. You could even, just buy things on spot, especially with the volatility of altcoins, and sell them, at certain points. Obviously, like a lot of people say, some of these altcoins, you're kind of just getting in and getting out. Generally, you don't have to get out at the exact right time. And I mean, the biggest thing here that we need to realize is a profitable, the one thing I wish somebody told me when I first started was a really profitable trader makes about 10 or 20% returns a month, which is, to a person in crypto where it's ruined you if you bought Bitcoin at 10K and it shot up to 60K in the last bull run, you're probably disappointed with that. But that's still a very good return. It's a return that people can make a lot with over a certain period of time. And obviously, if you use good risk reward ratio, so we'll talk about that more. But the most important things we want to realize here are risk management, number one, and number two, using a good risk reward ratio, because you don't need, so two big principles that I've learned in trading are, number one, anything could happen. And number two, we don't need to know what's going to happen to make money. And now a lot of people would think, well, don't I need to know what's going to happen to make money? Not necessarily, because we use a certain risk reward ratio, we use risk management. If we can get things right with a 3-to-1 risk reward ratio, 1 out of 3 times will be profitable. So you only need to win, 30, 40, or 50% of trades, depending on your risk reward ratio. So you could be wrong 7 out of 10 times. There's a lot of people who are wrong 7 out of 10 times, but they still can be profitable. There's a lot of trades. Like I entered a Solana long yesterday, and it was a 3-to-1 risk reward or reward to risk ratio. It got stopped out, and then I re-entered it a few minutes later. Now it's way up. It's soaring way up. The other day I entered an ETH scalp long. It got stopped out, and then I re-entered it. Things were looking better again, and then it hit that first take profit. That was a 3-to-1 risk reward ratio. So I won basically with doing that. I won 2 out of the 3 trades, and I only need to win 1 out of 3 to be profitable. And we'll talk about risk management, but basically, rule of thumb, what I would say is it's kind of like playing blackjack. You have, with more of an edge than blackjack, much more of an edge than counting cards, in my opinion, because you have that edge. And if you use good risk management, you could keep going there. And even, in blackjack, that's the biggest thing for people who are counting cards. They need to have that good risk management, because you could have say you have a trading strategy that wins 80% of the time. If you're risking the boat on it, that 20% of the time, you're going to get stopped out. So that's the biggest thing we need to realize. That's the biggest trader mindset that we need to realize. I would recommend to anybody who's really serious about this, read the book Trading in the Zone by Mark Douglas. It goes in a lot. It's nothing boring with charts or any of that. It's just all like the mindset and the probability that you need to realize here. You need to realize, like I said before, very important. We don't know what's going to happen, but we don't need to know what's going to happen to make money.
Now, I personally don't even know how to set a stop loss or how low or how high to set a stop loss. So I really want to today and through these videos go from beginner level to expert level linearly. But before we get to all that, what is your background? How'd you get into crypto and trading?
So I was into Bitcoin back when I was 18 years old, a little bit back in 2015, but that was just, I mean, I didn't know much about it. I liked the concept of it. I thought it was awesome in 2015. I bought a couple Bitcoins for about $200. But I was like, oh, all these people were doing it for illegal stuff. It was just, it gave me bad vibes. I told people around me about it, and they're like, what are you doing? This is all for criminals or whatever. That kind of turned me off about it. And I think, that was the criticism the Winklevoss twins got back in those days too. But I made some money with it in that bull run. And then I understood the 4-year cycle and I learned more about it. And then, I call our last bull run kind of the Michael Saylor, Elon Musk bull run, where we came up and I knew that 4-year cycle. So that's where I got really into it. And I bet a lot when Bitcoin was at 10K and Ethereum was at around 300. So did very well in that bull run, and it was a life-changing time. And I realized that there's a lot of money coming into this, so if I could center my life around trading and center my life around crypto as well as trading and learn these concepts, I could potentially do this for a living. And I've been successful at it. I've been doing it seriously, trading and investing in crypto seriously since late 2020. Got profitable in terms of trading in later 2021, which was able to kind of hold me over in the bull run. A lot of trades in 2022 that did pretty well. So yeah.
Let's jump in. I want to learn how to long something and short something. But just to be very clear, most people will lose money trading, correct? Like this is dangerous.
I would say it's the same odds of you starting a business and succeeding at it. It's the same odds if you wanted to be a Hollywood actor and succeeding at it. Maybe a little bit better than that. But yeah, everything worthwhile in life, everything with a really great outcome has a 90% or more failure rate. I would say, overall 98 to 97% of people lose money at this. But when you have people actually using good risk management and actually knowing what they're doing, and actually the biggest thing too is understanding how much because a lot of people will just put a trade in, they have no idea how much they're going to lose if it goes the wrong way. Once you get those basic things of understanding, I think probably 50 or a little over 50 people could be a break-even trader, which I think being a break-even trader is not as hard as some people may think. But to get that 10 to 20% a month, it's hard. Think of it like becoming a lawyer. Think of it like becoming a doctor. I'm not going to lie to you. It's a hard thing to do, but I'm not, there's a lot of people who say it can't be done. No, it can be done. You just need to be, it depends how much you want to. And I mean, let's be real, 90% of people who buy Bitcoin at any point usually end up losing money too. And the sad part is a lot of people who put money in the S&P 500 end up losing money because when the market crashes, they end up losing their job and they sell because they have to, not because they want to. So that's the sad reality of life sometimes. But yeah, definitely, that's kind of how it is. But you need to, the risk management part and realizing, how much you're going to risk per trade, how much you want to bet that price is going to hit this price before it hits this price. Those things, I think, are the main things that separate somebody who's going to blow their account out immediately versus somebody who's could learn this and be at least a break-even trader and learn something and maybe not lose that much money and potentially over a long period of time, a year or two, potentially get profitable.
Let's jump in. Take me through the basics. There's a affiliate link for Bybit down below if anybody wants to follow along. If you're fit that jurisdiction. But where do I start?
So the first thing, I'll show you just some basic like long-term type things. And I'll show you entering kind of a trade over on Bybit too as the affiliate. It's one of the biggest exchanges. I've been using that one for years, never had an issue. So there's a lot of different ones. There's no right or wrong way to do it, but yeah. And then let's go into, I'll share my screen right here. You should be able to see it right now.
Yep.
Okay, so perfect. So let's go on our Bitcoin chart and we're just going to start off with, so the first thing we want to look at here, this is a lot of stuff going on. These blue lines are where some trades I've entered that have been successful here. This down below is market cipher B. It's the main indicator I use combined with some traditional TA and combined with these. So SR points, support and resistance points, are very, very important in trading. One of the most important things in my opinion. And there are these, we call them spider lines right here. And I'll For your audience, I'll give you the link for this Bitcoin chart down below if you want to put it down below so they don't have to draw them themselves. These are really good SR points that are just super simple to do, combined with some other points that are really major. So just to, you'd have to go into more detail than this, but just to look at points where price like sticks to, see right here, right around 59K, price sticks to this point. So I drew out this line, which is a major point. Also right here, combined with kind of this spiral line area, 54K, it's a big point. You don't need to necessarily draw out these points, but they are useful, especially if you're taking profits. You could get away with just the spiral lines. These are like, I almost don't want people to know about these spiral lines because they are very, very, very good. Not too many people use them. So yeah, I want more people to know about them, but at the same time, I'm like, oh, maybe it won't work as if everybody's looking at that. Sometimes as a trader, you think about stuff like that. But yeah, so
these like are for the swing, for the horizontal lines, I see for the one on top, it wicked under it. Like how do you, I see it wicked under that top line, but it didn't, the bars didn't go under. I guess it seems to me this is more of art than science. It's half feeling, half seeing.
You look right. So this is, I would say it's a little bit more, I get what you're saying, but a little bit more science. Look, so the wicks hit here, they hit here and jumped up. So you're kind of looking at that point. It's a place where price is sticking. Obviously, if price is going to 100% bounce off of a point, we'd all be billionaires in a matter of weeks because we would know exactly what's going to happen. But it's just places where price is sticking. And that 60K combined with like a place where we know is a psychological level, that 59K. So that's one place to look at. I personally like the spider lines though, and these are just trend lines. All these are, let me just zoom out and show you here. It's kind of, it's a linear or a logarithmic type thing. I forget exactly, but looking at these trend lines over this area, we did the same thing we drew the same thing back here before at this bottom over to this area, and they worked really well in this bull run on the way up. And so,
but how do you know to put the center right there? Because that's not the bottom. That's a random top.
That's, okay. So somebody, I don't remember the name of the YouTuber who invented this some years ago, but basically the reasoning here is look at it's from the top of the candle, from the top of the candles to the top candle here. And you could do this on altcoins. Altcoins are a little bit more volatile and they don't follow the Fourier cycle as closely, but you can do them on altcoins as well. I've done them on ETH over here. It's basically the weekly, you use a weak magnet tool and you go from here and draw them to this point all over these areas. And it's basically, they're trend lines and they work exceptionally well, like a lot better than you would think they would work. That's all I'm going to say about them. It's the same thing as if you, this is a wild kind of, people would laugh at this, but if you have a mountain and you don't know how high the mountain is, and you draw some lines going up from what you have on the mountain, you could predict based on the shape of the mountain, the way it's going to go. That's kind of how it is. It's logarithmic or like linear regression in that aspect, if you want to get real technical.
Okay.
So, yeah. And to answer kind of your question, about the simple trading, we'll start with, kind of what we're looking at here. It's a lot of stuff on Market Cypher. This is Market Cypher B down below, and this is Market Cypher A up here. Basically, a lot of the stuff on Market Cypher A you could see on Market Cypher B. You could turn off some of the dots up here. I just like to keep them on to kind of, reiterate. And I use Heikin-Ashi candles, especially for swing trading. And it's good areas that show change in direction. See how it's all green? And then you have the red here. Not always going to be right. We'd be billionaires if it was. But again, like I explained earlier, most of the trade risk reward ratios I use, you only need to win 30 or 40% of the trades to be profitable here. So I'll show you the big thing so what I like to look at is one larger time frame and one middle time frame, especially for swing trading. So the larger time frame would be a time frame between the 2-day and the weekly right here. And what I'm looking at on these time frames to start is basically when you look at money flow. See money flow starting to come out here. That's a big thing we look at. It's on the weekly, it's not, it's more of a bearish trajectory downward, but it doesn't mean we're necessarily, going to go crazy all the way down. We can, but you look at the Fourier cycle and other things, and you can't just look at one time frame necessarily. Usually you can't just look at one time frame to make money. It's not that simple. There's certain strategies that will work on one time frame. Most of the time you have to look at least 2 or 3. And the thing here I was looking at, this is the VWAP here. This yellow line right here that's starting to curve down. This is what we call the VWAP. So When this curves down on a time frame between the 2-day and the 4-day, and what I want to look at is here. Look how it's turned to curve down near the zero line. This is where it gets more bearish. This is where you're looking for more of a short opportunity. And you want to look at this combined with here is really good. So little trigger wave, you see this trigger wave right here on the 3-day. This is what we want to look for a potential short. Money flow coming out. This is a change in trajectory downwards. So this was the area. So we were looking at, we kind of want to front run this a little bit, or at least I did, because you see it, you're already coming down a lot here. So VWAP's coming down. And I like to look at a time frame. I've tested this about 1/16th or 1/15th lower to enter the trade. And I'll show you what I'm going to look at there. So for the 3-day, it would be approximately like the 4-hour, the 5 hours, what we would be looking at. And here's where the swing short, this was a really good trade that I labeled it, right here. And what we want to look for on this time frame is our money flow. And we want to look for, this is like basic market cipher B strategy, looking for curvature on the money flow and money coming down. And we want to enter, especially for a swing trade, right here as money flow goes from green to red. You could set an alert on market cipher B that alerts you when it goes from green to red, or you could just, for a swing trade, usually you have a few hours or a day to enter it before you're really going to miss out on the trade. Sometimes there's trades that take weeks to play out. It's a big patience game. There's people that will enter a trade, they'll get bored with it after 3 or 4 days, they'll close it out for $100 loss, and then it completely goes in the right direction they want it. So it's a patience game. It's a lot of discipline, and that's certain. Some of these things just take a lot of time and trial and error to kind of learn. You're not gonna like playing golf or playing any hard sport. There's certain discipline things that just take a little while to learn, and that's I would recommend start on a small account. Or there's even, I know Bybit, they used to have like demo accounts where they would give you it would be like 10K of just fake money that you could play around with. I'd recommend people play around with it for a month or two, and if you can get 10 or 20% over those 2-month periods, you'd be surprised. Most people don't have the patience to do that. I would say 90% of people who over a 2-month period could get 10% a month on like a Bybit account, even if it's a fake trading account, they probably can be a profitable trader. It's harder to do than you would think. But to get back into this trade setup, swing highs are big places to set stop losses. So I took out my short position tool, and this short would have been entered right around here. You'd want it above the swing high here. This would be like the most logical place to put your stop loss. You'd enter the trade.
So it's a swing high because it could always go higher, but it's a swing high because it just went back down. So it swung the other way, and you're projecting it'll go lower.
Yeah. Or, if we had a spider line, like this one's too high up, but say we had a spider line like maybe a little bit above this here, I would maybe go a little bit higher and put it above this line. That could be, but we don't have it right here. And, you're already losing this spider line, which it's generally not always, but obviously when you're losing a place and your money flow is going from green to red, at least half the time or a little bit more than half the time, it's going to continue, down farther. So if we look at a trade like this, we put our stop loss above here. This risk reward ratio is not bad. The minimum risk reward ratio, so you can see it right here, it's 1.19 right now. And that's kind of the minimum I'd like to do at 1-to-1, because you need to win a little over half of your trades to be profitable with this risk reward ratio. What I would like to do here though is typically, I'd like to see ideally a 2-to-1, because with a 2-to-1, I wrote it down here, you only really, to break even, you need to win 1 out of 3 trades. To be profitable, you only need to win a tiny bit over 1 out of 3 trades to be profitable, assuming you're using good risk management. Good risk management, assuming we have like an account with 10K in it, we're only risking 1 or 2%, $100 or $200 each time. Think of it, that type of bet there. And, a risk reward ratio like this would have been a really good place to take profits. 60K area, just a really big place. Now, some people, you could even go down here, a 3-to-1, it depends, or, there's different ways to do it here. So what I typically try to do is take out 70% of my trade right here, set my stop loss to my entry point. So you could let the trade run risk-free. And if you get stopped out, people are going to say, okay, you have to pay fees. It's a mild fee, and you're still going to make money, obviously. It's a mild fee there. But this 3-to-1 right here is pretty good. I don't really go much above a 3-to-1. What I try to do in that case is I would put my stop loss a little bit more lenient in case price, and it will happen. that's why people get frustrated. Sometimes, you will get wicked up and stopped out, but you got to realize with a 3-to-1 risk reward ratio, you will be plenty profitable if you just win 1 out of 3 trades. I think I keep reiterating the risk management because, you could have the best strategy in the world. You could be 90% of the time right, but if you're just betting your whole account, betting the farm in every trade, you're going to lose money. That's where a lot of people get tripped up in this game. So
So
that
where
was
do I find, like, how do I find something that tells me the risk to reward?
Oh, it just shows it right here. Look, if you see, do you see where it says risk reward
I see
ratio?
it, but how do I get
Okay.
that? Because I use TradingView.
Oh, oh, okay. Yeah, gotcha. You go to this right here and you hit the arrow and go to long or short position right here. Long or
Interesting.
short position. So short position right there.
Evan
Fibonacci.
just realized how much of a novice I am.
Well, when I first started TradingView, yeah, I didn't in the beginning, I'll be honest, when I was messing around with it, I never used this tool. I just went on Bybit or whatever and just said, okay, let's bet this amount, 10x leverage, no stop. I had no idea what I was, you need to like the biggest thing too in Trading in the Zone by Mark Douglas, which I think is the best book on trade. It's nothing with charts or anything like that, just all psychology and basic stuff. You need to like think of it like how much do I want to bet on this particular trade? And if that amount that you want to bet is an amount that makes you nervous, is an amount that you are not comfortable losing, you're betting, way too much. Like it should be like, I mean, even for like some people, I mean, they say you want to have a bigger account to be a profitable trader. And the reason I think that could help some people is because like you're more comfortable betting smaller amounts of the account. Like people, if you have a 10K account, people will be betting, they'll be betting $100 and they'll be getting that 10% a month, maybe 5% a month, 500 or $1,000 a month. Then they'll get very impatient. Oh, I'm going to bet $500 a trade. I'm going to bet $1,000 a trade. And then you're going to get wiped out there. That's what's unfortunately going to happen. But if you have a bigger account, I think people are more comfortable, if you have a 100K account betting like $1,000 per trade. That's what, that's the advantage kind of people with more money may have at this a little bit, but it is absolutely not impossible to start with a 10K account. I mean, I started like a realistic goal here for somebody who knows what they're doing or somebody's pretty good. I started with a 10K account back in November. It's now about a 70K account, and that's hundreds, if not probably 1,000 trades over that time, just risking small amounts over and over again and getting that compound. And people I've talked to that are, successful at it, realistic goals are maybe, that 10 or 20% a month, that kind of area, like I mentioned. So what I want to show you now is with this similar strategy here, so we had that strategy. The first take profit could have been here. It could have been a little bit lower. It depends. I took my first take profit on this one. I believe it was around 59. And here could be a start of another swing long. And let me show you what we could be looking at that. So what we could be looking here. So you have money flow coming out here, and people would get tripped up a little bit on this on their 3-day. You have money flow coming out. People would say, oh, this looks bearish. Well, it does look bearish, but we already came down. This could have already played out, especially when you have big wicks down. That's a 26% drop down. And we're recovering and we're holding significant areas. As long as we hold kind of that high 50s, 60K area, we could be in a bullish trajectory. I look at the Fourier cycle a little bit. August of 2016, the same thing happened in the Fourier cycle. We dropped down about 30%, shot right back up. So it's wild how closely the Fourier cycle plays out sometimes. You obviously don't need to know that to be a profitable trader though. So we look at our 3-day and let's look at, about 1/15 of that. The 4-day, between the 3-hour and the 8-hour are good time frames to look at for the entry. And you're looking at bull divs and trigger waves. And I'll show you, and money flow coming up. So we have our money flow. This looks very good right here. This is what we're looking at on our 4-hour. And we're holding 60K, which is a good area too. And we have kind of, you could call these trigger waves because you have the anchor wave down here. Anchor wave is a lower wave and then trigger wave to the anchor wave. So you have a low wave and then you have triggers to that. That could be a bullish thing. That's one of the many pieces of the puzzle. And if we look, this may be a bullish divergence. So, okay, this is not a bullish divergence because what we'd want for a bullish divergence is we want price to come down. Price is going up as these waves are going up. We'd want price to come down. But that doesn't mean that this trade can't win. That just means we don't have our bullish divergence. But I think there's enough good things here. And if I look at my 5-hour, that's looking good. The same trigger waves. We want to see confluence among time frames. So This is looking good too. Nice trigger wave here. So how would we make this this potential swing long? Now, we confirm this trigger wave. This would be a great place to potentially enter it. And this is a swing low right here. So this would be a good place to set a stop loss. If you want to be more conservative, you could do a stop loss here. Since we're holding that area, I would probably do a stop loss below here. And then if it gets stopped out, look to re-enter. Remember, we could lose a good amount of trades and still make money at this. So what I would do is probably here, the swing trades, your risk reward ratio could be, more on the closer area right here. So 1.4, you would need to win a little over 40%, about half of your trades to be profitable at this. I'd go probably 66K, maybe set an alert when it hits 66K and then see how things look. If things are looking more bearish, like if, say we do, it takes a while and then we finally get there and then, you have money flow coming down, like right here when we're hitting that point, then take your profits. If things are still looking good, say you're seeing, a trigger wave, right? If we zoom in on the 5 hour right here, we see a trigger wave, this green dot, like here, if we can see it, okay, yeah, like here, those are things we could look at. So you have to, you follow the strategy and you have to kind of look at what's happening too. You don't have to do that. You could just set, you could just set this trade and go out, play golf, just forget about it and just wait for, you don't have to do that. Just wait for the outcome. But, everybody has a slightly different way to kind of do it. And there's no exact wrong way and right way. So I think this would be a pretty good setup here. If you wanted to be more, a 2-to-1 right there, you'd only need to win this type of trade. Let's see, that would be about, a little over 1 out of 3 times to get it. So, this setup, I would say, would go ahead.
And 2-to-1 means it's double the risk to reward.
Double the reward to risk. Double the reward to risk.
Okay.
The minimum I do is 1-to-1 because because that's when you could win slightly over half the time and be profitable. I would say this trade probably, if you went 2-to-1 here, you'd need to win slightly over 40%. This trade slightly over 40% of the time to be profitable. I would say this has at least a 50% chance of winning, probably a 60% chance of winning if we can drive back up to, 68K. It's a real big area. And if we draw another, you've probably seen people draw this on charts, just basic trend line right there.
I've drawn that on charts.
Yeah, everybody, yeah. Big basic place right there, 68K. That would be a good place. These spider lines next to each other are pretty powerful. Like I'd be surprised if you just jump above 69K without a fight and just go right up to 79K here. It's probably, in all likelihood, you're good. And people say follow the trend. Like the trend is up, hit that point, come back down. Up, hit that point, come back down. Up, hit that point, come back down. What's the trend? Probably going to hit that point again. So that would be the big area to be taking profits on a trade like that. And that's basically, the swing longs, like the simplest, type of trading that I do. A few other, like, let me just show you a few other, you can look at.
But if I wanted to set that up on an exchange like Bybit or whatever, how would I do that?
Let's do that. I'll enter it right now. That's a great question.
And as Evan shows me how to set up these basic trades and starts me on my journey, I also recommend Margex if you're following along. Use promo code Altcoin to unlock the full benefits. That's Altcoin. And register now to claim up to $10,000 in bonuses. Link down below. Again, you can follow along on Margex or follow along on Bybit.
Let's go to our Bybit. I have it up here. Let me just find it. And yeah, so we got our Bybit trading account right here. And we got about 15 grand on this trading account. And we have that trade set up. And I'm going to show you the Market Cipher risk calculator too, which says you don't even have to own Market Cipher to use the risk calculator. It's a really good tool, and that's going to show you here. So we're going to set up that trade right here. We're going to look at that. And we're going to, what I always like to do is get my points where I'm going to set my stop loss and my first take profit using, the tool I showed you, the long tool. And I'll do a 1.75. We'll take profits. Actually, let's take profits of this spiral line. Now that's a little bit lower than I want to be. Okay, let's take profits of the trend line. That's a big area I showed you right there. So we'll compromise in between these two. So 1.77 here. And we're going to go to our risk calculator. And so basically marketciphertrading.com/risk-calculator. And I'll show you, like, give you a basic, it's pretty simple to use. You're going to type in how much money you have in your total trading account, and you're going to type in position size. So you want your position size to be approximately 20% of the count. And even one reason for that is if you want to do another trade, say you want to short something, you want to do a day trade or something like that. The other reason is, what if you mess up and do 100x leverage instead of 10x leverage? It is possible. It's only happened like once to me over the past 3 years, where I like blew out the whole trade by doing 100x, instead of like 2x or something like that. But it can happen, and you'd only blow out about 20% of your account if you do make a foolish mistake like that. I think it happens to everybody once every 5 years, if not less. So that's what you got to look at there. So let's say about 20% of that would be 3,000 would be our position size. That's 20%. And how much do we want to risk in this trade? Let's risk about 1% we want. Let's risk about $150, which would be 1% of this trade right here. And what we want to know here is our stop loss percentage. So we're going to look at that in TradingView. Right here, our stop loss percentage is about 6.47%. So this is going to be, with a stop loss that high, it's going to be a low leverage trade. And it's telling us it's a little risky to use a stop loss of this percentage. I would just ignore that. This is a more conservative calculator. A lot of people use these for scalp trading. They're not necessarily looking at swing trading, so it's not a big deal. And your leverage, 0.77, it's a conservative calculator. Usually I would go 2 or 3x with this type of thing. But for somebody starting out, I would just listen to the calculator, and you would pay less in fees. The lower the leverage, you'd pay less in fees. So let's do that trade with let's do a simple just 1x right here, and we'll do that trade. And what we're going to do here is to limit the cheapest way to do this is to, especially for a string trade, you should be able to limit in. It's super simple. You're going to click the price right down here. If it's a long, if you're just short, you're going to click the price up here. And this is just going to try to limit us in at the best place. And we're going to type in the quantity. So we had 20% here. So we want a little under 25% of our account. So that's a 0.062 Bitcoin we would be buying right here. You want it to have post only checked, and that's going to make sure you limit in so you save on fees. Approximately, and it should on the calculator, it should tell you, the contract size. We want a $2,300 position. So this position's a little bit higher than we'd want. So we want to go down to around 2,300. That's 2,400. That's approximately what we're looking for right here. I mean, if you want to be exact, you could do that, or it would be approximate area like that. And then hit this button again right before you go in and hit buy long, and we're going to go confirm. And we submitted that order right here. What I'm going to do right now, since what you could do if you want to, I would just keep the order here. You could chase price a little bit with this thing right here, and then once it goes down, we just filled it. Yeah, so that's how you fill it really quickly.
We did it.
32 cents. We paid 32 cents in fees. And we could potentially make $300 from this.
Oh, but it's filled. Doesn't mean we won the trade. It just means, wait, or does it?
No. It does not mean it's a swing trade. So this could take days, if not weeks, to play out. Probably.
Okay, so I got it. It filled, meaning we bought it, and we're waiting for the end of the swing.
Very important now. We're going to set our stop loss. Most important thing here, and we have our stop loss. We're going to look at our TradingView chart. Our stop loss is going to be at 57147, approximately around that area. Oops, wrong one. Where was it? Give me 1 second here. Where did I put that? Oh, yeah, right here. Okay, so we're gonna set 57147, I think it was. Yeah, $150 we wanted to risk. And if you click right here, that's gonna show how much it risks. And I don't do a take profit up here like this, because this could make you mark it out. And I want to take out a partial amount here. The easiest way, I think, to do that, there's a lot of different ways.
What is market out?
Market out is where you're not limiting out, where you're just getting out quickly. It's just like marketing in versus limiting in. You pay more in fees. So theoretically, you always want to, if you can, limit out, unless, like, the only times I market out is, let's say price just shot up 20% right now. Something crazy happened, and I'm just like, I want to take that $1,000 I just made or something and just get out quickly, because I think, usually when you shoot up like crazy, it's going to come back, and vice versa. When it goes down, it just crashes like crazy.
So market out is just like a market buy all at once, and limit out, just like a limit buy, is you're waiting for a certain thing.
Exactly.
Okay.
And you pay less in fees if you limit. Yeah, you pay less. because I paid 32 cents is a good deal for this, and I could potentially make, $200-300 on this potential trade. That's a real good deal, especially if I limit out, pay another 32 cents to limit out. That's a good deal. So what you're going to do to let's set our take profit here. What we're going to do is set the take profit is we're going to type in our order price that we want to take the profit at. So let's go back to our trading view right here. And our price is going to be just under 68K. If it's right around 68K, I would do it just under. So 67999, you could go 67998. I like to do numbers like that. It's usually if you get close to the price, it's going to fill. It's pretty rare that price, you don't hit, it doesn't get filled by $1. It does happen, but it's pretty rare. So we're going to go 68,999. I think that's what it was, right? Yeah. Or, oh wait, 67,999, excuse me. So 67,999. And I typically always take about 70% out on the first take profit. You could take the full amount out. You could be profitable that way. I like to take about 70% out. So 70% here of a 0.038 would be about 0.03. We'd be taking out $2,000 out of a, $2,300 position. Something of that nature would make sense. You could go, it depends what you want to do. There's no exact right or wrong way to do it. There's certain people who, if you're really bullish, you'd only take half out, but I would at least take minimum half out. And when you hit that first take profit, you're going to set your stop loss to entry point. And then you could potentially add to the trade and set your new entry point to your stop loss. And, it's not every time that you're going to, keep winning and price is going to keep going up, but those are some times where you can make a lot of money without risking technically much, without risking really anything other than the fees you would pay. So let's put this order in to limit out right here. And we're going to go post only. That's going to make it as a limit order, so we don't have to pay the fee. And we're going to reduce only. So what reduce only does is it makes it so we're not going to short the market in the other direction. We're not going to short the market like crazy. So say I typed in 2 Bitcoin or something by accident, a higher number. Reduce only makes it so I'm not going to short 2 Bitcoin at that area. I'm just going to close out the trade. So we're going to go sell short, and we're going to confirm that. And you should be able to see if you zoom out, here's our stop loss and here's our first take profit. And we're going to sit on that and we're going to wait. And yeah.
And is there anything that could go wrong? Like if this is waiting, swing trade a couple days, what would be a reason to pull out? Or if we get stopped out, what does that mean? I guess that means a stop loss hit. But why would we need to pull out?
Okay. So I'll answer the first. Yeah, why would we need to pull out? So that's debated. It's pretty rare that I pull out of a trade unless things start getting, let's say so there are rare bullish signs that come up. We just had one, so it's not going to happen on the, the weekly again. But if you look at a situation like this, if we're going long and we see a blood diamond pop up on the weekly, this is a very rare bearish sign. I know some people are talking about, Armageddon, thinking we're going to come down this much from it, or I think, okay, no, this is the only time it's happened on this time frame before. But if you get something like, say you get a blood diamond like on the 2-day, maybe something like this, like a kind of estimating a black swan to a certain extent when this was happening during pandemic right here. If you see something crazy like that, then by all means, yeah, you could get out of the trade, maybe take a little loss or something. Maybe it's in profit when you see that. Just take your little profit and then wait a little bit, see what happens, and potentially re-enter. It's debated. I debate with myself a lot whether you should ever, close out a trade early for a small loss, because there are, I would say ones that I have closed out for losses because I thought the market was going the other direction. I'd say half of them would have hit first take profit, half of them would have got stopped out. So it's not, it's debated. That's a very debatable thing to really look at. But if you have you don't need to do that, because if you have that strategy right and you're using good risk management, we know that strategy is going to work at least that 40%, that 50% that we need to make those profits. And I feel like for a beginner trader, when you're beginning at it, you get really emotional, you get really impatient. Those are the things that typically make you lose. I'm sure you heard the quote that trading is patient people taking money from the impatient. I think that's factually very, very true. Factually very, very true. So yeah. And then I think, what was the second part of that question? I'm trying to remember.
Well, I said something about getting stopped out, but that makes sense to me. Hit the stop loss.
Yeah, so if it hits the stop loss with that risk reward ratio, about a two to one, a little under a 2 to 1, we need to win about 40 to 50% of the trades to be profitable. If you're losing more than, if you do 5 trades or let's say 10 trades and you're losing more than half of them, if you're losing not enough to be profitable, then you're doing something wrong. Either your strategy isn't good or you're doing something wrong. If you just get stopped out of that, no big deal. You're just going to look for the next potential trade. I mean, I lose trades all the time and I still, make money overall. I make that 10 or 20% a month, sometimes even more, losing trades. Like I was mentioning to you, before, like this trade on Solana that I took off at this point yesterday. The first trade I took it, I forget exactly where I entered it, but long story short, it got stopped out and then I re-entered. Now it's in some really good profits and I'm hoping it comes up a little bit more. So basically with that risk reward ratio, let's go back to that area, right? Where we, price is still pumping a little bit right here, but here, so it was around this area. You need to win a little over 40% to be profitable, or actually 1.5 to 1, you need to win 40% of the trades. A little over 40% to be profitable. 1.7, you'd probably only need to win about 40% of your trades. So if you do 10 trades like this and you don't win any of them, yeah, you're absolutely doing something wrong. If you do 10 trades like this and you win 5 of them and the other gets stopped out, I would say, you didn't have the best luck in the world because usually you could win 6 or 7 out of these, but you're still doing, you're doing it right. So, yeah.
Off camera, I told you I wanted to break this discussion up into a beginner section, intermediate trading section, and expert trading strategy section. Are we still, is this the beginner? I'm assuming we're still in beginner.
That everything I went over is just as basic as we can get for trading, as basic.
Okay.
I would
This
say,
is,
but the intermediate and expert is not that much worse.
you want to hear something crazy?
Yeah,
When we started this, it looked really confusing, but I'm getting it. I think I'm getting it.
that's good.
Um, I'm trying to think. I have to go in 10 minutes. Maybe is it okay if let's wrap up the beginner, and if you're available tomorrow the next day, film
Yeah,
the okay, cool.
absolutely. Yeah, great,
Let
perfect.
let's flip it off, screen share, and
Okay.
just give me final thoughts, man. In summation, this was so valuable today. Final thoughts?
Yeah. So, I mean, a lot of people watching this, if you've never seen Market Cipher, if you've never seen trading before, this is probably some of the most basic things that I think the average person can use to potentially be a profitable trader. I would say, maybe go slowly, take some notes on this, take some notes on, what I said. There's Crypto Face invented Market Cipher. Watch some of his live streams. Watch a lot of this. I would say you want to be pretty dedicated to it. I'm not saying that you have to quit your job or anything like that. Don't do that. But, at least a couple hours a day, maybe 2 hours a day, something of that nature to, really watch and really see these things. But the two most important things here, the risk management, you're going to get impatient. You're going to want more than that $100 or whatever you're risking for that trade. You have to have that discipline. You really have to have that discipline. If you don't have that discipline, you're better off just going Michael Saylor, just buy Bitcoin, just buy and die. You know what I mean? So yeah.
And I want to just for the audience, I'm going to start, on my own in the daily videos, start doing some of this or incorporating it. So, make sure you subscribe to try and learn along the way, and make sure you subscribe to Evan. Like, your channel is killing it. I'll link for your thing down below. I do have a question. Tell me
Yeah.
if this is a flawed thought. I think Bitcoin's going over 100K in the next year, let's say. Everybody says so. If I have, let's say, one Bitcoin and I hold, that's going from around 60K to 100K, 40% or whatever. I get a significant increase. What if I long Bitcoin at this price? And, that's a way to get more Bitcoin. Is that if I'm willing to like weather through the storm, is that a good thought?
So you need to still use good risk management. There's a lot of people who are trying to do that last market cycle. I agree with you. I think it's going to go up, but we got to be prepared. What if there's a black swan? You've got to look at your liquidation point. The better way to do something like that is the Michael Saylor strategy, where you kind of borrow against your crypto. Now, you need to trust who you're using too. You can do that on Bybit as well, where you borrow against it and buy more Bitcoin. If you hit your liquidation point, you could hopefully hit the margin call because you would put that Bitcoin back into that. That's what Michael Saylor had to do, I believe, when it went under 20K. He was okay until down to like 5K or 3K or whatever, but he did have to give some of his Bitcoin back as collateral. That's what you need to be careful with. So if you do that, you need to look at your liquidation point, based on your leverage, and you need to be comfortable losing that amount of money. That's what I would say. It could be a good gamble on low leverage. It definitely can be if you want to bet that Bitcoin doesn't go under, 30K or hits 100K before 30K. You can do that. The other thing you got to realize too is there are funding fees on Bybit or whatever. Typically, overall, most people who are going to be trading on Bybit are going long. If there's more people going long, you have to pay to do those longs. The shorters kind of get paid for that. So I would say if you're trying to hold a trade that long, you might be better off doing a Michael Saylor type thing, borrowing against your Bitcoin and just buying more Bitcoin because you don't have to pay funding fees on that. Just a little bit of interest.
Evan, I'm so excited for the intermediate trading strategies and the expert trading strategies. Stay tuned, folks at home, for that. But thank you, man.
I really appreciate it. Honored to be on.